Welcome back to Money Made Simple. When it comes to housing, I've been told my views are extreme. I don't think they are, but based on the comments, this topic clearly hits a nerve. So today, let's clear it up and talk about the real question. What is the true financial value of owning a home, especially heading into retirement? And how does a paid-off home change how much you need to save and invest? Technically, net worth is simple. Assets minus liabilities. So yes, your home is an asset and your mortgage is a liability. That's the textbook definition, and it's correct. But here is the practical reason some people don't include their primary home when tracking net worth. A primary home usually doesn't generate income. And if your goal is financial independence, it can be helpful to track the assets that actually create cash flow like investments, retirement accounts, and business income. That said, you can do this any way you want. Include your home, exclude your home, or track two numbers: net worth with home and net worth without home. There's no single right answer. Finance is personal. Here's another statement that gets people fired up. Homeownership is not the only path to wealth. You can build wealth as a homeowner or as a renter as long as you consistently live below your means, invest every month, and avoid letting lifestyle inflation eat your future. Owning a home can be amazing. But investing consistently is what usually builds long-term financial freedom. And with that said, home ownership absolutely has real value, especially in retirement, so let's talk about it. To keep things simple, let's run an example. Assume someone buys a home in their 30s using a 30-year mortgage and has it paid off around traditional retirement age. Now imagine entering retirement with no mortgage payment. That can be huge because housing is typically the largest monthly expense for most households. A paid-off home can reduce required retirement income dramatically, meaning you may need a smaller portfolio to feel secure. Even though you still have costs like property taxes, insurance, repairs, and maintenance, the mortgage is often the biggest piece. A lot of retirees do. And how much that affects you depends on how long you plan to keep paying it. If you only have a year or two left, that's one situation. But if you plan to carry a mortgage for many years or indefinitely, then your retirement plan needs a larger buffer to support those ongoing payments. The longer you keep a mortgage in retirement, the more income your portfolio must generate. Renting can absolutely work, but here's the biggest challenge: rent can rise over time. If rent increases with inflation or faster than inflation, your retirement budget can get tighter in later years, especially if your income doesn't keep pace. That's why a paid-off home can feel like a form of expense protection in retirement. You're not exposed to rent increases. You're not exposed to landlord decisions, and you have much more stability and control. There's no doubt about it. Going into retirement with a fully paid-off home can reduce your monthly expenses, reduce how much you need saved, and create peace of mind in many situations. It can be the difference between needing a much larger portfolio or reaching financial independence sooner. But here's the important part. A home is a piece of the puzzle, not the whole puzzle. A paid-off home gives you shelter and stability, but it usually doesn't pay your bills in retirement unless you take extra steps like renting part of it out, downsizing, or using strategies like reverse mortgages, which aren't right for everyone. That's why investing still matters regardless of whether you rent or own. If your goal is to own a home, that's great, especially if you can reach retirement with it paid off. But don't make the mistake of thinking a home replaces investing. Whether you're a renter or homeowner, the long-term plan is still the same. Keep saving. Keep investing. Keep building assets that can support your lifestyle. Now I want to hear from you. Do you count your home in your net worth? And do you think owning a paid-off home is essential for retirement? Drop your thoughts in the comments. If this video helped, like it, subscribe to Money Made Simple, and share it with someone debating rent versus buy. See you in the next one.